Hello, American Gold Eagle sales rebound sharply in August. What's important here is the divergence in the increase in gold sales in August versus the decrease in silver sales. We have not seen that type of divergence for a few years. Let's go through the numbers and see what happened in August for U.S. Mint gold sales for American Gold Eagles. U.S. Mint sold 50,000 1-ounce American Gold Eagle coins in August, up 67% from the 30,000 they sold in July 2016. Now, this number was still down 36% from the 78,500 they sold in August 2015. But if you recall, last year, July and August were big years for the American Gold Eagle. But perhaps this represents a shift in investor sentiment from silver to gold. We saw massive amounts of silver being sold and very tepid sales in gold during 2013, 14, and 15, while we had record silver sales. And part of that was silver was so cheap. And now silver's gone up. It's still cheap, but the gold-silver ratio is about 70. It had been as high as 80. But the sales of the 1-ounce American Gold Eagle coins were up sharply month over month, from 30,000 last month to 50,000. If you recall, from yesterday, we went through, we went through the American Silver Eagle sales. They had gone from about 4 million in May to 2.8 in June, million to 1.3 million in July to 1.28 million in August, and we saw a steady decline in the sales of American Silver Eagles. Here we've seen an increase in American Gold Eagles. And as far as August goes, this is a chart here that shows every August since 1987, even though the American Gold Eagle and Silver Eagle were introduced in 1986. They were introduced late in the year, so they were not August sales. But you can see 50,000 is a decent month for August. It's better than most. I think it was the 9th best August. The first day of September, we sold, or the U.S. Mint sold 5,000. So they're off to a good start. It could be a sign that the bigger money is moving into gold. Remember, large investors do prefer gold. There's lower storage costs. It has a longer history of not as money, but as wealth preservation. Central banks still own gold, so it's not the same as the people that stack silver stack it mostly because it's cheap, and also because it's more speculative. But when there is a financial crisis brewing, or uncertainty, or just general wealth preservation, gold is clearly the go-to metal, whereas silver is considered something to buy that's like gold. It's less expensive. You can break it down into smaller amounts. It's good for barter. I like both metals. I'm just saying that gold is the money of kings. And it could be that we're now entering a phase where gold sales pick up and silver sales continue to lag. Now, if you look at what I was talking about, this is a chart from 1986 to 2016 full year charts. Gold clearly was in favor when they first came out with the Gold Eagle, and then in the late 90s, before the Y2K fears, there were plenty of over 1.5 million 1-ounce Gold Eagle coins sold. In 2009, 1.3, and then it kind of declined, and that's when silver took off during this time period between 2010 and 2015. But this year, it looks like the American Gold Eagle sales are going to be at least as high as 2013, and they'll get closer to maybe 2011. Because we're at 486,000 already. Gold premiums on the American Gold Eagle, they really haven't changed much. You can pay about 5% over the spot price of gold. There was a period of time last year when they stopped making Gold Eagles a little early at the end of last year, and the premiums went up. That was not really a good time to buy because they were just changing over the dies. I didn't feel like making any more, but it didn't reflect that there was any type of shortage at the time. At least I don't think so. But you can see that the gold premiums are relatively constant on the Gold Eagle. Now, here's the main thing I want to talk about the silver to gold sales ratio. Now, you can see here in 2014, the U.S. Mint sold 105 American Silver Eagles, 1-ounce Silver Eagles, for every 1 ounce of gold. And that had been on the rise all through the early parts of 2010, 11, 12, 13, 14. It was still about 75 to 1 in 2015. It dropped to 64 to 1 in the first 6 months of 2016. But here's where I think we've reached an inflection point, because if you go down and look now, in August, that ratio has dropped to 25 to 1. The U.S. Mint sold 1.28 American Silver Eagles and 50,000 1-ounce American Gold Eagles. Now, if you look, 25 to 1, we haven't reached that since 2009 during the financial crisis. So as the price of silver seems to be higher, and maybe there's more looming economic issues, maybe the Fed is not going to raise interest rates, or if they do raise interest rates, it'll create chaos. The market is always even in good times, is always kind of on pins and needles towards the end of the year, especially when October comes around, even before all the Shemitah talk. So, maybe we'll see a pickup in gold sales in September. And I did, as I mentioned, I got the first September numbers for gold, and already 5,000 sold on the first day and 120,000 American Silver Eagles. Not bad, but that's a ratio of 28 to 1. So you can see now we're in the 20 range, where we used to cut it in quarter. We used to be at 105 to 1. The gold-silver ratio has kind of crept back up as silver has taken a bigger hit than gold. It's up close to 71. Just a quick note on the gold-silver ratio. There is no guarantee or no reason for the gold-silver ratio to fall to its what they call the natural ratio, which is the amount of silver that's either available, that's mined, or above ground or below ground. The real issue is what's demanded more. For example, platinum is 10 times rarer than gold, and it is not 10 times more expensive than gold. Similarly, my artwork is far rarer than the numerous pieces of work that Picasso made. Again, my artwork is not worth more than Picasso. So I think it's kind of a red herring to look at the gold-silver ratio and think that silver is somehow needs to be more expensive and the price needs to go higher just to get its ratio down. Not necessarily. There could be reasons why silver could go up and the ratio could go down, but it's not because it has to go down because of the relative rarity, because rarity is only one element of the puzzle. A lot of it has to do with supply and demand. A lot of it has to do with sentiment. What do people want more? What are they willing to pay for? And it could be the big money wants gold more than it wants silver. If that's the case, then the gold-silver ratio does not have to fall any further. Hope you enjoyed this, and also please remember to subscribe to Smaulgld.com, and then also subscribe to the YouTube channel. Remember to follow us on Twitter at Smaulgld, and also check us out on Facebook and Google Plus at Smaulgld. Thanks for listening.